Hello dear students and welcome to a new advanced accounting lecture. Here is example 2, the case of positive goodwill. On 1st of January 2018, X Corporation, which is the parent company, acquired 100% of Y Corporation, which is the subsidiary. And you have given the balance sheet for both X and Y company. You have the book value and the current value. The given is almost the same like example number 1. You are required to prepare the elimination entries, the working paper, and finally the consolidated balance sheet for X. As the previous example, step number 1 in the solution is to get the investment in Y, which is given for $250,000. Step 2, to calculate the current fair value of net assets of Y. How? We add all the current fair value of assets of Y minus the current fair value of liabilities. The result will be equal to $230,000. Here we can find that there is a difference between the investment paid in Y, which is $250,000, and the current fair value of net assets of Y, which is equal to $230,000. And the investment paid is more than the current fair value of the subsidiary company. This means that there is a positive goodwill equals to $20,000. Step 3 is to get the difference between the book value and the current value of Y assets, which will be equal to $30,000, as inventory equal to 40 minus 30, the difference is 10. Plant assets equal 180 minus 160, the difference is 20. So the total differences here is equal to 30,000. Now we are ready to prepare the elimination entries. I'm gonna put inventory and plant assets and the goodwill. Don't forget to place the positive goodwill with the assets. All these in the debit side. Inventory equals to 10, plant assets equal to 20, goodwill equal to 20. And these are the differences between the book value and the current fair value of the assets. And place investment in Y Corporation by 50, the total, in the credit side to eliminate this account. The other or the second elimination entry is to get all the shareholder equity of Y and place it in the debit. Common stocks equal 80, addition paid in capital 70, returned earning 50, and place investment in Y by the total in the credit side to eliminate it. Second is to prepare the working paper. It is the same like example 1. All the similar accounts like assets and liability will be added, okay, and investment in Y will be eliminated. And don't forget to place the goodwill, okay. Current liabilities and long-term liability will be added. The shareholder equity of Y will be eliminated. Only the shareholder equity of X will appear. So cash 140 and 110 equal 250. Inventory 60 plus 30 plus 10. 10 is the difference between the book value of inventory and the fair value. It's an increase, so the total consolidated will be equal to 100. Investment in Y will be eliminated, so place 250 in the decrease side, and it will be equal to 0 because we have made an elimination entry for investment in Y. Plant assets 220 for X plus 160 of Y plus the difference between the book value and the fair value of Y equals to 400. Patent 10, no patent here, so it will remain the same, 10. Goodwill, no goodwill here, neither here, only place it in the increase in the elimination column and put it in the consolidation. Current assets and long-term liability will be added. Add the total assets equal to 780, add liabilities and owner's equity after elimination of Y's shareholder equity. The result will be also 780. Third is to prepare the consolidated balance sheet. By finishing the working paper, you are ready to just copy the last column, which is called consolidated, and copy the items of assets and liabilities, and you have the consolidated balance sheet done already. So how about if we have a negative goodwill? This is an example to illustrate how we treat the negative goodwill. We have this given like the previous example. We have company X and company Y, book value of Y and current fair value of Y. And you are required to do the same, to do the elimination entries, to do the working paper and the consolidated balance sheet. Let's see how we are going to deal with this example. We are going to do the same steps like the previous example. First, the investment in Y is given by 250,000. Then we calculate the current fair value of net assets of Y. How? By subtracting the current fair value of the assets minus the current fair value of liability. The result will be equal to 260,000. So we can see that the investment in Y is 250 and the current fair value in Y is more than the investment, which is equal to 260. So the difference will be 10,000, which is considered as a negative goodwill. Type. How are we going to treat this negative goodwill? Negative goodwill will be deducted from both plant assets and intangible assets, which are given in the balance sheet in proportion. Okay? Let us see how we are going to calculate it. Now we calculate the plant assets share from the negative goodwill. How? We multiply the negative goodwill that we have calculated, which is equal to 10,000, multiply by the plant assets fair value from the given balance sheet, divided by the total plant assets and intangible assets fair value. This will be equal to 10,000 multiplied by 200, which is the plant assets fair value, divided by 220,000, which is the total of plant assets and intangible assets fair value. The result will be equal to $9,090. Then it's turn to calculate the intangible assets share from goodwill. I'm gonna do the same, but we're gonna multiply the negative goodwill by the intangible assets fair value divided by the total plant assets and intangible assets. So 10,000 multiplied by 20,000 divided by 220, the same total, equals to $910. So the share of plant assets from the negative goodwill equal to 9,090. The share of intangible assets from the negative goodwill is 910. This means that when we make the journal entry, the elimination entry, we're gonna subtract these amounts from the plant assets fair value and the intangible assets fair value, like we are going to see. Step number 4 is the same as the previous example, is to get the difference between the book value and the current fair value of Y assets. There is a difference in inventory by 10,000, a difference in plant assets by 40, a difference in intangibles by 10,000. The total is $60,000. Now you are ready to prepare the elimination entries. The elimination entries is the same like the previous example. We place the assets in the debit and investment in Y in the credit. And we place the assets by the difference in its book value minus fair value. And don't forget to subtract the negative goodwill from the plant assets and the intangible assets. Now we are ready to prepare the working paper like we have done before. We're going to add the cash of X plus the cash of Y, inventory of X plus inventory of Y, plus 10,000 from the elimination entry in the debit. Investment in Y will be eliminated. Plant assets of X plus plant assets of Y, plus the increase from the elimination entry, and put the result here, the total here. Intangibles no intangible assets for X, intangible assets of Y plus the increase 9090 after we have deducted the negative goodwill and placed the total in the consolidated column. Add all the assets, then make the same for the liabilities. Don't forget to eliminate the shareholders equity of Y and add the liabilities and owners equity to get the same total. Finally, we can prepare the consolidated balance sheet by copying the last column from the working paper, which is the consolidated column, and the items from the working paper also. Thank you and goodbye.